Hey folks, Michael Smikun here from Callagy Law. And as part of contribution back to the community, a lot of business owners and other folks have been reaching out and asking questions about what do they do with their businesses now that their doors had to be shuttered as a result of the coronavirus and its impacts on their business. And we spoke a little bit about business interruption insurance as a plan A that people should be looking at and focusing on. And then it's part of the plan B if they can't otherwise make their cash flows carry them through this down cycle caused by having to shutter their doors, being forced to by civil authority to stop business. Essentially, how do they go from point A to point B so that their businesses are as affected as little as humanly possible? And so we have with us Taber from Inca Capital, who's going to be talking a little bit about a funding solution for some folks. And so I just want to say thank you, Taber, for joining us.
Great. Thanks for having me, Michael.
Of course, man. So tell us a little bit about you.
Yeah. So I'm born and raised here in Scottsdale, Arizona, and have been in the real estate industry for, roughly 8 years now. I've been doing on the finance side for almost 2 years now here at Inca Capital, and we're a hard money lender, private money lender, bridge lender. Those are all kind of one and the same. Just kind of depends on the term you prefer. But yeah, so I think we're talking about is really short-term bridge financing for some of these business owners that are in a little bit of a pickle, and that's ideally what we're here for, is to help people out on a short-term basis.
Amazing. So tell us a little bit about Inca Capital. What does Inca Capital do?
So we are essentially a private lender for real estate transactions. So we require first deed of trust on real estate is collateral, and we fund loans for all asset groups really. So we touch all the major food groups. You got multifamily, office, industrial, single family homes. So we pretty much do everything. In today's market, with some of these businesses having to shutter their doors and might be having some cash flow problems, we do offer a cash out refinance product, which I think some people might need right now. Standard cash out, we're anywhere between 65 and 75% of value on your real estate asset. We're a direct lender, meaning we have our own funds. We're not a broker. We don't go out and shop the deal. We have money sitting in the bank ready to move.
So let me ask you this question then, Taber. So I'm a business owner, right? And I have 20 employees. Because of the COVID-19, I had to shutter my business for 2 months. So I didn't have revenue coming in. I'm concerned about, my growth. I'm concerned about continuing to pay employees and things of that nature. I have a primary residence with, 40% of my equity built up inside of it, worth, $500,000. And I own the building, right, that my office is in. What is the time frame, right? What does a transaction actually look like if they need money now? Like, I'm afraid that I can't pay my bills, in 3 weeks. I have enough to last me for 2 weeks. The third week, that's questionable. Like, what does that transaction look like?
Right. So transactions where if someone has significant equity in their single family residence, their primary residence, we could come in and do a cash out for them in 2 to 3 weeks time frame is our typical turnaround. We can move as quickly as 2 weeks. Kind of depends on the borrower's ability to get us all the due diligence as required, and sometimes we're handcuffed by the title companies on how quickly they can move. But we can move quick. On a commercial building, let's say if it's an owner user and they own their building, underwriting commercial asset is probably more in that 3 week time frame. But we can move quick, and that's why people come to us instead of a bank. We don't have as many boxes to check, so to speak. We can move quickly, and we're pretty streamlined. So
yeah, and so pretty much everybody knows that a traditional financing location would be your bank, right? This is a not so traditional mechanism for lending, and I love your company's byline, which is the softer side of hard money. And you and I have had some experience in working on these deals together. and you've been helping some of my clients as well with their short-term needs. So the kind of transaction that would probably be the best fit for the business owner and for you would be a transaction where the person has collateral, right? Real property, where you can probably cash out, whatever equity they have. So take out any existing debt that they already have, give them money on top of it. And what would a business owner expect to pay in terms of interest on a transaction like this, and over what period of time?
Right. Yeah. So we're short-term bridge. Our loan terms range anywhere from 6 months to 2 years. We're flexible on time frames. A lot of our clients, especially with the current market today, there's a lot of kind of unforeseen things down the road. We can be creative in the structure where we do a 6-month loan with options to extend if needed. So you're not having to come out of pocket originally, just in case you only need the money for 3 to 6 months. So yeah, what was the other part of that question?
I was going to say, and what kind of interest rate, just the interest rate, would they be looking at on a deal like this?
Yeah.
Because when you think hard money lending, right, you think pay the money back in 6 months at 17% interest, right? Or in states where there's usury, it's 16% plus 2.5 here plus 2.5 there, and if I don't pay back in 6 months, you're going to break my thumbs or my kneecaps. So what does the softer side of hard money actually look like traditionally?
Yeah, you're right. I mean, and that's kind of why we came up with that logo. There's, it's the popular opinion that, hard money lender, we're wearing trench coats, sitting on the corner of the street, But yeah, we try to bring more of an institutional approach. Just kind of a quick background on our senior principals here. Our CEO, Bill Cleverly, he co-founded Meritage Homes back in the day, turned them into a top 10 nationally publicly traded home building company. Our CFO, Brandon Walters, was a CPA from Deloitte. So you're absolutely right. Your traditional hard money lenders are in that 12 to 17% range. Your standard bank loans are in that kind of 3.5 to 5% range. And we kind of fit right in the middle there. We're in that 7.5 to 8% range. And we require, so the only difference why people come to us, the difference between us and your traditional hard money lender is the guy charging you 15 to 17% interest will typically go a little higher on leverage, right? You might be able to get a little more cash out from those type of guys, but you're paying a pretty penny for it.
Right.
For us, we're a little more conservative. Hey, we'll give you 65, 70% of value on your cash out, but we're going to give you a friendly rate.
100%. So I guess, Taber, if someone were to say, wow, this looks really appetizing to me, of course they can contact you. Is that fair?
Yeah, absolutely.
So, and assuming someone were to contact you and they were to get on the phone with you and say, hey, Taber, so yes, I'm ready to pull the trigger. Yes, I want to do this. What traditionally should they be providing you, preparing for to get the best possible package ready so that when the rubber hits the road, they can get money from your bank account into their bank account as quickly as possible?
Right. We have a standard loan application, but I mean, really just to get the process rolling. Let's say someone wanted to cash out of a primary residence, we would just need the address of their home. So kind of the difference between us and a bank, we're more concerned with the collateral value, not necessarily the financial standing of our borrower. So that's the main difference. So we really underwrite just the value of the collateral. And secondarily, we'll want to look at our borrower's personal financial statement, make sure there's no pending litigations and whatnot. But as far as that process, really within 48 hours, we can get out a term sheet and kind of get the process rolling.
Amazing. So Taber, I just want to say how much I want to thank you for providing this information, providing your time. And of course, we're going to get your contact information. We're going to put it below the video, which we'll provide to our distribution and make sure they can contact you. Again, my name is Michael Smikun from Callagy Law. Taber, last words, anything, brother?
No, Michael, I always appreciate working with you. I know we've been able to help a couple of your clients out in the past. And we're a small office and we're in the business for the right reasons. We don't, something you got to be careful of. We don't sell our loans on the secondary market. So all your borrowers, your clients can be rest assured that if a problem goes, if a problem happens with the loan, they'll be dealing with us directly, not some random person that just bought the note.
Amazing. Taber, thank you so much. I appreciate you, brother.
All right. Thank you. Have a good one.
You too.